So here we are in Las Vegas. This whole town is one giant casino, but it's not the biggest casino.
No, not even close, Mike. I'd say number 1 is
Wall Street.
Number 2 is
The Comex.
And number 3 is
That's Las Vegas.
You know, Mike, one of the things I've put in my investing rules was to get as much silver as you can for the amount invested, meaning, you know, buying silver, physical silver.
Physical silver. I got to stop you for just 1 second. I want to tell you, this shows the integrity and honesty of this man. He doesn't sell physical silver. He sells investment guidance on mining stocks. Yet he tells everybody, buy physical first. He doesn't make any money on that. What he's doing is he's working for his audience. He's doing the best that he can for them. Go ahead.
Thanks.
By the way, silver-investor.com.
Okay. So I believe that, but I also want to explore a little deeper on the Silver Eagle side because one, you sell a great deal of eagles, and I've said, and I haven't done it often, that there's a unique property about the Silver Eagle, and that is that one, they only started being minted since 1986. Another thing, and I want you, of course, to bring up a lot of stuff too, but you know all this. The average sale of Silver Eagles from 86 through about 2008 was roughly 10 million ounces on an annual basis. There are some years it was under 10 million, some a little over, but that was roughly the average. Then we started getting the silver bite. This is just the start of really things that are going to happen in the future, in my view. What I like is the fact that at some point, the Silver Eagle will stop production. I don't know when.
Well, they're running into the physical limits of production right now, unless they change the Eagle Act. Because, I mean, you already know this, but the silver that they mint them out of has to be domestic silver, right?
Right.
Tell us about it.
Well, I forget what year, it was a few years ago that the act had to be reinitiated, and Congress had to vote on it, and they did. And in the act it says that you have to have domestic silver, so it has to be produced out of U.S. mines on U.S. soil to go into the Silver Eagle program. And the U.S. is not the biggest silver mine in the world anymore by a long shot.
There's a lot of areas that have become depleted, and mines have actually shut down in some cases.
Exactly, and then the other fact is that most U.S. mining is costly, more costly than other areas of the world. You've got labor laws in certain states, you've got workman's comp, you've got medical benefits, you've got all this stuff, unionized labor in some cases. And I'm not saying any of that's good or bad, all I'm saying is the cost per ounce out of the ground for those wage earners is higher than, let's say, if you're mining in China or Mexico or Peru or some of these other locations. So because of that, you have to have a very rich silver mine, if it's just silver, in order to be economic.
Yeah, well, like we were discussing when we were in Singapore, we could only identify 2 companies that actually make a profit digging up silver. The rest of them do it at a loss. Yeah. And one of them actually isn't a primary producer with mines. They're doing
royalty program.
Yeah, royalty program.
Yeah, that was a smart move, really.
It was very smart. But my point on the domestic silver is that domestic production has been falling, and the Silver Eagle program is getting up to the point where very soon it's going to run into this brick wall of using up all domestic production just for Silver Eagles, and then they can't mint anymore after that. By law, it has to be silver from domestic production.
Right.
And so once they've used up domestic production, that's the cap. They can't create any more Silver Eagles. I've often said that Silver Eagles should develop a premium in a shortage, and they developed a huge premium back in November of '08. They were selling at 4 times the spot price. When shortages developed around the world of precious metals, the markets started to crash. Gold and silver went with them at first, and I believe it's because now you've got everybody with trading platforms, and they've got the ETFs like SLV and GLD, the exchange-traded funds, on their platforms, and they're trading that on margin, just like they're trading everything else. And then they've got futures contracts that they can trade, and when they get a margin call, they have to liquidate everything, and so the market's plunged, And I think that you just saw gold and silver, which would normally would have diverged and done the opposite. It would have been the place everybody ran to for safety. It went with the markets for the ride for a little while. When gold broke 850, suddenly all these buyers came in when it fell below 850. And the physical market just completely dried up. Then there was this silver rush like we have never seen. And 100-ounce bars were going for 18 bucks an ounce on eBay. And silver eagles were 35 bucks an ounce when silver bottomed below 9 bucks in November of '08. So on the same day, if you had the ETFs or futures contracts, your silver was worth less than 9 bucks. If you had silver eagles, they were worth more than 35.
Yeah, it's amazing. And I think it's a precursor to what we're going to see in the future. I think you're going to get to a point where it's too hard to get the physical, or at least in size.
Yeah.
And that's why I'm very bullish on the mining equities longer term, because people go to the next best thing.
Yeah.
And you know, pardon me, but I really think a lot of people don't do a lot of due diligence.
No, they don't, and that's the reason I urge people always to get some guidance, and that's the reason that we recommend you.
Yeah, well, thank you. But aside from that,
you do the due diligence. Yeah. You look at the mining companies. You used to go and visit everyone that you would recommend.
I used to do them all. I have help now, but coming back on point, I think what will happen is, as this market progresses, people will say, you know, I like to buy silver, but you know, my dealer's out, or you know, there's a big premium in them or something, so I'm going to go to the mining equities. And since almost everybody in the States, and I don't want to say around the world, but there's a lot more trading platforms now than ever in world history. So it's real easy to, you know, drink your Coke and get on the computer and say, I want to buy, you know, XYZ mining or ABC mining or EFG mining. And that, I think, is going to really take these stocks to unheard of levels. Because
it's going to be bigger than any bull market that we've ever seen. So here we come up to Luxor. There's this big old black pyramid right over here. And this is a good time to start talking about pyramid schemes.